Welcome to this audio press release, powered by IBN. This original production delivers market and sector insights, as well as executive interviews with innovative executives shaping the future in fast-moving industries, and may feature a client partner of IBN or one of the 75-plus investor-focused brands within IBN's dynamic brand portfolio. As a multifaceted financial news and publishing company, IBN leverages an extensive distribution network, utilizing multiple proprietary corporate communication tools to introduce both public and private companies to a vast and diverse audience of investors, consumers, influencers, journalists, and other targeted segments of the public. IBN may have received compensation to produce this audio content. Please be sure to read IBN's entire disclaimers for full disclosures. This article has been disseminated on behalf of Nightfood Holdings Inc. and may include a paid advertisement. Headline: Nightfood Holdings Inc. expands AI robotics platform to support semiconductor infrastructure, advanced manufacturing. A tectonic shift is reshaping global semiconductor manufacturing. Hundreds of billions of dollars in new investment are flowing into the United States, pulling Taiwan's advanced manufacturing ecosystem closer to North American customers, capital markets, and emerging opportunities. As artificial intelligence drives unprecedented demand for semiconductors and data center infrastructure, the companies enabling that production, including the precision engineers, automation providers, and specialty materials manufacturers, are beginning to follow. Positioned directly at this intersection is Nightfood Holdings Inc., doing business as TechForce Robotics, an AI-enhanced robotics and automation company that is actively building its strategic footprint within this migration. TechForce Robotics just announced a strategic alliance with Taiwan-based Jiang Enterprise Co. Limited, a precision engineering and advanced manufacturing company serving the semiconductor, advanced packaging, and industrial automation industries. The partnership is designed to give TechForce Robotics access to decades of expertise in semiconductor-grade manufacturing, advanced materials processing, and high-performance production systems, capabilities central to the ongoing migration reshaping global manufacturing. This move reflects the company's commitment to becoming a key player among companies focused on providing the hardware and infrastructure that power today's rapidly expanding AI ecosystem, including NVIDIA Corporation, Advanced Micro Devices Inc., Broadcom Inc., and Supermicro Inc. The migration of Taiwan's semiconductor supply chain into the United States is no longer a trend in early formation. It is an industrial realignment already in motion. A growing body of opportunity is emerging for the companies that manufacture, automate, and support the production of AI systems. TechForce Robotics is positioning itself to participate in this dynamic. JJ Enterprises technologies support critical applications across AI infrastructure manufacturing, advanced packaging, and next-generation thermal management. Each new facility that comes online requires significant investment in automation, robotics, and production systems. TechForce Robotics is developing its capabilities in direct response to this demand. A parallel transformation is taking place in how Taiwan's industrial technology companies are approaching growth capital and international expansion. Taiwan's semiconductor suppliers are moving west. The migration of Taiwan's semiconductor supply chain into the United States is no longer a trend in early formation. It is an industrial realignment already in motion. As Taiwan Semiconductor Manufacturing Company Limited and other major manufacturers expand American operations, their ecosystem of suppliers, such as equipment makers, automation providers, specialty materials companies, and engineering firms, is under growing pressure to establish a closer U.S. presence. The forces driving this movement are multiple and reinforcing. Geopolitical risk plays a significant role. Concentration of the global semiconductor supply chain in Taiwan has long been viewed as a strategic vulnerability. According to the U.S. Taiwan Business Council, several Taiwanese material suppliers have already established significant facilities in Arizona. That physical presence is helping both TSMC and US-based semiconductor manufacturers reduce exposure to potential supply disruptions. Commerce Secretary Howard Lutnick has publicly stated that a goal of the US-Taiwan trade framework is to bring 40% of Taiwan's semiconductor supply chain to the United States. The financial scale of this migration is substantial. In January 2026, the US and Taiwan signed a trade agreement that includes $250 billion in direct investments from Taiwanese semiconductor and technology enterprises, alongside an additional $250 billion in credit guarantees to expand chip production capacity in the United States. These commitments go well beyond TSMC itself. They signal a broader expectation that Taiwan's broader manufacturing ecosystem will follow its anchor customers westward over the coming decade. Industry analysts have noted that the migration creates both opportunity and complexity. Building supplier relationships, establishing manufacturing operations, and navigating US regulatory environments all require local partnerships and institutional knowledge. Early movers in this process stand to benefit most, gaining access to customers, contracts, and capital before the field becomes crowded. DigiTimes reported in mid-2025 that TSMC's Arizona expansion is acting as a magnetic pull for Taiwanese suppliers, accelerating a wave of cross-Pacific expansion initiatives. TechForce Robotics is moving with this current. The company's strategic alliance with JJ Enterprise connects TechForce to a Taiwan-based manufacturer already embedded in the semiconductor supply chain. JJ Enterprise's expertise in advanced semiconductor packaging, thermal interface material manufacturing, gallium-based liquid metal processing, and precision industrial automation spans exactly the capabilities that new North American fabs will need as they ramp production. By building this relationship now, TechForce Robotics is positioning itself as part of the migration rather than watching it from the outside. The AI build-out creates demand far beyond the chip designers. Wall Street's attention in the AI cycle has remained concentrated on a handful of household names. NVIDIA, AMD, and TSMC capture the bulk of focus and media coverage. But the infrastructure supporting the AI revolution is far wider and deeper than these headline companies. A growing body of opportunity is emerging for the companies that manufacture, automate, and support the production of AI systems. The numbers underscore this reality. Global semiconductor sales reached $208.4 billion in the third quarter of 2025, a 15.8% increase compared to Q2, according to the Semiconductor Industry Association. Monthly sales for September 2025 reached $69.5 billion, a 25.1% jump compared with September 2024. This level of demand is creating significant downstream pressure for manufacturing capacity, automation systems, and production support technologies across the ecosystem. The companies supplying those capabilities are operating in fast-growing markets of their own. The numbers underscore this reality. Global semiconductor sales reached $208.4 billion in the third quarter of 2025 alone, reflecting a 15.8% increase over the prior quarter. Monthly sales for September 2025 reached $69.5 billion, a 25.1% jump compared with September 2024. This level of demand is creating significant downstream pressure for manufacturing capacity, automation systems, and production support technologies across the ecosystem. The companies supplying those capabilities are operating in fast-growing markets of their own. One particularly significant growth area is semiconductor automation. The global robotics in semiconductor market was valued at approximately $10.9 billion in 2025 and is projected to reach $27.34 billion by 2035, growing at a compound annual growth rate of 9.65% over that period. North America is the fastest growing regional market, expanding at 8.28%. That trajectory reflects the wave of new fab construction underway across the United States, as manufacturers invest heavily in automation systems to support advanced node production and increase throughput. Advanced packaging is another area seeing accelerating investment. As chip architectures move toward more complex three-dimensional integration and heterogeneous packaging, the automation and precision systems required to support those processes are becoming more sophisticated and more valuable. The semiconductor advanced packaging market is projected to grow at a CAGR of 9.4% between 2025 and 2030, driven by AI and high-performance computing demand. The broader semiconductor assembly and packaging equipment market is forecast to grow from $9.72 billion in 2025 to $17.44 billion by 2032 at a CAGR of 8.72%, with automation and AI-driven systems playing an increasingly central role in production. These are not peripheral opportunities. They sit at the core of how next-generation semiconductors are manufactured. TechForce Robotics is seeking to access this opportunity through its partnership with JJ Enterprise. The alliance gives TechForce access to expertise in advanced semiconductor packaging technologies, including CoWoS and next-generation thermal management solutions that are central to AI chip production. How AI spending flows through the ecosystem. No company better illustrates the cascading effect of AI infrastructure spending than Supermicro Computer. Supermicro does not design chips, rather, it assembles AI servers. Yet, as hyperscalers and enterprises raced to deploy AI infrastructure, Supermicro's business grew to reflect that demand directly. The company's trajectory shows how transformative AI spending can be for companies operating one or two steps downstream from the headline chip designers. The financial results are striking. In its second quarter of fiscal year 2026, Supermicro reported record net sales of $12.7 billion, more than double the revenue from the same quarter 1 year earlier. Full-year fiscal 2026 revenue guidance was subsequently raised to at least $36 billion. In June 2026, the company announced a $7 billion equity financing transaction to fund purchases of components needed to satisfy AI server orders it had recently received. These are not incremental milestones. They reflect explosive, sustained demand. Supermicro's success creates demand throughout its own supply chain. The company relies on hundreds of component suppliers, manufacturing partners, automation systems, thermal management technologies, and precision production capabilities to assemble its AI server platforms. As Supermicro scales production across its facilities in the United States, Taiwan, Malaysia, the Netherlands, and the Middle East, its supplier ecosystem scales alongside it. The AI infrastructure boom is not confined to chip designers. It flows through to every layer of the production stack. TechForce Robotics is positioning itself to participate in this dynamic. JJ Enterprise's technologies support critical applications across AI infrastructure manufacturing, advanced packaging, and next-generation thermal management. These are precisely the production capabilities that companies such as Supermicro depend on as they ramp AI server output. The engineering disciplines embedded in JJ Enterprise's operations, including precision motion control, materials handling, process consistency, and contamination management, are directly applicable to the production environments that AI infrastructure manufacturing requires. Intelligent manufacturing is now a competitive necessity. Semiconductor manufacturing has never been a forgiving industry. It demands extraordinary precision, exceptional cleanliness, and unrelenting consistency. As chip geometries continue to shrink and packaging architectures grow more complex, those demands are intensifying. Manufacturers are responding by investing heavily in automation, robotics, machine vision, and intelligent production systems. These technologies are no longer optional enhancements. They are becoming foundational requirements for competitive semiconductor manufacturing. The scale of investment reflects the urgency. Industry analysis indicates that global semiconductor companies plan to invest approximately $1 trillion in new fabrication plants through 2030. In the United States alone, the Semiconductor Industry Association has tracked more than $645 billion in announced private semiconductor investments across 140-plus projects in 30 states since 2020. Each new facility that comes online requires significant investment in automation, robotics, and production systems, creating downstream demand throughout the manufacturing technology ecosystem. TechForce Robotics is developing its capabilities in direct response to this demand environment. The company operates through a robotics-as-a-service model that provides scalable automation solutions across multiple industries. Through its alliance with JJ Enterprise, TechForce gains access to semiconductor-grade manufacturing expertise and advanced automation capabilities that are immediately relevant to the needs of new US fabs. Unlocking new capital for Taiwan's manufacturers. A parallel transformation is taking place in how Taiwan's industrial technology companies are approaching growth capital and international expansion. For decades, many of Taiwan's most sophisticated manufacturing and engineering firms operated as private companies serving large OEM customers within established supply chains. The AI infrastructure boom, combined with the migration of semiconductor manufacturing toward North America, is creating new incentives to seek public market access, cross-border partnerships, and US exchange listings. The motivations are clear. Public market access provides capital for R&D investment, manufacturing expansion, and talent acquisition at a scale difficult to achieve through private means. US exchange listings provide visibility with American institutional investors and customers. Strategic partnerships with US-listed companies provide a pathway to North American market participation and capital without the cost and complexity of a standalone IPO. As the semiconductor ecosystem migration accelerates, these cross-border transaction structures are becoming more common and more strategically significant. The CHIPS Act has created additional incentives for this dynamic. The legislation's $39 billion in manufacturing incentives is available to companies investing in US semiconductor facilities, creating financial reasons for Taiwan-based manufacturers to establish American operations or partner with US companies. The Chips for America program continues to fund projects spanning fabrication, advanced packaging, manufacturing equipment, and materials production. Companies with North American operating relationships are better positioned to participate in this funding environment than those without one. TechForce Robotics and Nightfood Holdings are pursuing a strategy that reflects this evolving landscape. The company's proposed acquisition of a controlling interest in JJ Enterprise is designed to give investors in a publicly traded US company direct exposure to the migration of Taiwan's advanced manufacturing capabilities into North America. The convergence of TSMC's 6-fab Arizona buildout, CHIPS Act-driven investment across 30 states, and accelerating demand for AI infrastructure is creating a window for companies able to position themselves at the intersection of Taiwan's manufacturing expertise and North America's capital and customer base. TechForce Robotics is building precisely that position. Through its alliance with JJ Enterprise and its broader automation platform, the company is seeking to participate in an industrial migration that is already well underway and that is likely to define the next decade of semiconductor and AI infrastructure growth. AI infrastructure powers next-generation innovation. Artificial intelligence continues to evolve beyond algorithms and applications, with the industry's focus increasingly shifting toward the infrastructure that enables large-scale deployment. Recent developments highlight growing investments in high-performance computing, cloud integration, cybersecurity, and edge intelligence, underscoring how the next wave of AI innovation will depend on scalable, secure, and energy-efficient platforms capable of supporting increasingly sophisticated workloads across enterprise and industrial environments. NVIDIA Corporation is collaborating with Amazon Web Services to bring AI production at scale. The company observed that building AI systems at scale is demanding, requiring low-latency inference, fast vector search, strong GPU price performance, and infrastructure that can grow without multiplying operational complexity. NVIDIA's latest work with AWS addresses each of those constraints. For example, EC2 G7 instances, powered by NVIDIA RTX Pro 4500 Blackwell Server Edition GPUs, expand the compute layer for AI, graphics, video, and data analytics workloads, while the NVIDIA QVS library accelerates the retrieval layer by making GPU-powered vector indexing the default in OpenSearch serverless. Advanced Micro Devices Incorporated has signed a definitive agreement with Rackspace Technology. The agreement is for the phased deployment of an initial 30 megawatts footprint dedicated to AMD-based compute deployments across Rackspace's global data centers beginning in late 2026 through 2028. The agreement operationalizes a Memorandum of Understanding announced in May and establishes AMD as a strategic technology partner at the silicon layer of Rackspace's governed AI stack. Broadcom Inc. announced significant security investments for the Spring and Java ecosystem, relied on by over half of Fortune 500 companies. To help the Spring community navigate an unprecedented surge in AI-detected security threats, Broadcom's Tanzu business released the largest set of Spring security updates to open source in Spring's 23-year history. Additionally, for customers, Broadcom is extending its proven cleanroom build architecture, foundational to Bitnami, to build the Java dependencies for the entire Spring ecosystem. These investments aim to protect the integrity of Spring and prepare Broadcom's customers for the continued rise in AI-enabled security threats. Supermicro Computer Incorporated is expanding support for AI-optimized edge computing solutions powered by Intel technologies. These solutions include new systems featuring Intel Core Ultra Series 3 processors, Intel Core Series 2 processors, and Intel Arc Pro B Series GPUs. The systems range from compact, fanless systems for industrial applications, short-depth 1U rack-mount servers for space-constrained environments, and a mini tower for office environments. Designed to be a cost-optimized solution for low-latency AI inferencing and intelligent automation, the expanded portfolio helps organizations across retail, manufacturing, physical security, transportation, and logistics deploy scalable, power-efficient AI at the edge. These milestones reflect a broader transformation in the AI ecosystem as organizations strengthen the foundational technologies required to support widespread adoption. As advances in computing, networking, security, and intelligent edge systems continue to converge, AI is becoming more scalable, resilient, and accessible, laying the groundwork for the next generation of enterprise applications and real-world automation. For more information, visit Nightfood Holdings. This audio press release is an original content production powered by IBN, a multifaceted financial news and publishing company that delivers next-generation corporate communication solutions utilizing proprietary corporate communication tools such as news aggregation, syndication, social communication, and brand awareness techniques, among others. IBN introduces both public and private companies to diverse audiences to enhance reach and recognition. IBN may receive compensation for services and solutions provided to its client partners. The owners, officers, and directors of IBN, or any of its financial analysts mentioned in this production, do not hold positions in and do not intend to trade the securities of any IBN client partners' companies. This production is not an offer or recommendation to buy or sell any securities that may be mentioned in this production. The information in this broadcast is presented solely for informative purposes and is not intended to be, or should it be construed as investment advice. As in all investments, investment in the featured companies carries inherent investment risk. Listeners should review the company thoroughly with registered investment advisor or registered stockbroker. This production by IBN is not purported to be a complete study of the featured company or other companies mentioned. Information used in statements of fact have been obtained from featured companies and other sources, but not verified, nor guaranteed by IBN as to completeness and accuracy. Such information is subject to change without notice. Please read IBN's entire disclaimers and disclosures at ibn.ai. Thank you again for listening to this audio press release powered by IBN.